What is going on, everybody? Welcome back to Trading Learning 101. Today's video we're going to talk about trading halts. So let's jump into it. I'm going to be reading the definition of trading halt from the Investopedia website. If you want to check out this website and this definition yourself, I will leave a link in the video description. Feel free to check it out. So what is a trading halt? A trading halt is a temporary suspension trading for a particular security or securities at one exchange or across numerous exchanges. Trading halts are typically enacted in anticipation of news announcements to correct an order imbalance as a result of a technical glitch or due to regulatory concerns. When a trading halt is in effect, open orders may be canceled and options still may be exercised. How a trading halt works. A trading halt is most often instituted in anticipation of an announcement of news. This will affect a stock's price greatly, whether it be positive news or negative news. There are thousands of stocks traded each day on public exchanges such as the New York Stock Exchange, NYSE, or the NASDAQ, and each of these companies agrees to pass on material information to the exchanges prior to announcing it to the general public. In order to promote the equal dissemination of information and fair trading based on that information, these exchanges may decide to halt trading temporarily before such information is released. Material developments that warrant a trading's halt can include changes that relate to a company's financial stability, important transactions like restructurings or mergers, public announcements related to a company's products like a recall, personal changes to upper management, or regulatory or legal announcements that affect the company's ability to conduct business. Trade resumption refers to the commencement of trading activities after they have been shut down or halted for some periods of time. Key takeaways. A trading halt is a temporary suspension of trading for a particular security or securities at one exchange or across numerous exchanges. Trading halts are typically enacted in anticipation of a news announcement to correct an order imbalance as a result of a technical glitch or due to regulatory concerns. Halts may also be triggered by severe down moves in what are called circuit breakers or curbs. Trading halts at market open. Companies will often wait until the market closes to release sensitive information to the public in order to give investors time to evaluate the information and determine whether it is significant. This practice, however, can lead to there being a large imbalance between buy and sell orders in the lead up to the market open. In such an instance, an exchange may decide to institute an opening delay or a trading halt immediately at the market open. These delays are usually in effect for no more than a few minutes until balance between buy and sell orders can be restored. If a halt occurs before the official open of trading, it is called held at open. There are three main reasons why a stock is held at the opening. New information is expected to be released by a company that may have considerable impact on its stock price. There is an imbalance in buy and sell orders in the market. A stock does not meet regulatory listing requirements. Trading delays and trading halts that occur at the beginning of the trading day. Traders can find trading halt and delay information on an exchange's website. For an example, if your stock's on the NASDAQ exchange, you can go to the NASDAQ.com and you can go to the current trading halts it'll give you the halt date, the time it was halted, and the halt code. And there are multiple halt codes that are out there. For an example, a T12 halt is trading halted for information requested by the NASDAQ. And a T12 halt could be hours, days, weeks, months. The NASDAQ is requesting information from a company, and the company needs to respond with the NASDAQ to get out of that halt. And here's a list of all the halt codes from T1, a halt news pending, to a T2, halt news released. I will leave a link to this in the video description down below. There are a lot of halt codes out there. But back to the definition on Investopedia. United States securities law also grants the Securities and Exchange Commission, SEC, the power to impose a suspension of trading in any publicly traded stock for up to 10 days. The SEC will use this power if it believes that the investing public is put at risk by a continued trading of the stock. Typically, it will exercise this power when a publicly traded company has failed to file periodic reports like quarterly or annual financial statements. You'll see this difference with listed stocks on big exchanges like the NASDAQ, New York Stock Exchange. These companies have to give information to these exchanges because they are publicly traded. Now, when you get into OTC stocks and pink sheet stocks, those companies don't have to do that. That's why they can be shady trading OTC stocks and pink sheet stocks. And they're trying to get up with the big boy stocks like on the NASDAQ exchange, the New York Stock Exchange, and the American Stock Exchange. Exchange circuit breakers. Stock exchanges can also take measures to ease panic selling by invoking Rule 48 and halting trading when markets have severe downside movement. Under 2012 rules, market-wide circuit breakers, or curbs, kick in when the S&P 500 index drops 7% for level 1, 13% for level 2, and 20% for level 3 from the prior day's close. A market decline that triggers a level 1 or 2 circuit breaker before 3:25 p.m. Eastern Time will halt trading for 15 minutes, but will not halt trading at or after 3:25 p.m. Circuit breakers can also be imposed on a single stock as opposed to the whole market. Under current rules, a trading halt on an individual security is placed into effect if there is a 10% change in value of a security that is a member of the S&P 500 index, Russell 1000 index, or QQQ ETF within a 5-minute time frame. 30% change in value of a security whose price is equal or greater than $1 per share, and 50% change in value of a security whose price is less than $1 per share. A lot of times as a trader, you will see a lot of circuit breaker halts. Circuit breakers are measures approved by the SEC to curb panic selling on U.S. stock exchanges and excessive volatility. Large price swings in either direction and individual securities, also known as collars, circuit breakers temporarily halt trading on an exchange or an individual security when prices hit predefined tripwires, such as a 13% intraday drop for the S&P 500 or a 15% rise in a company's share price over 5 minutes. I will quickly play this video right here on Investopedia.
A circuit breaker is a measure taken during large stock exchange sell-offs to avert panic selling. They usually involve a trading pause or the establishment of restrictions for when an index falls by a certain percentage. They give investors a chance to calm down and evaluate their options. The New York Stock Exchange started using circuit breakers after Black Monday in October of 1987, when the Dow Jones fell more than 22%. Circuit breakers have been modified a few times since this debut. The S&P 500 is the benchmark used to determine when they're activated. At level 1, a 7% drop in the index from the previous day's close before 3:25 p.m. Eastern Time results in a 15-minute halt to all stock market trading. At level 2, a second 15-minute trading halt is enacted if the reopened stocks decline 13% before 3:25 p.m. And at level 3, a 20% decline after stocks reopen halts trading for the rest of the day. After 3:25, stocks only stop trading if the index falls 20%.
It's good to know all of these definitions as a trader and an investor, and that's why I'm making this video, to open doors and show you guys what's out there in the markets. You gotta protect your butt and your account and know about all this stuff. Again, I will leave links to all this great stuff in this video description down below from Investopedia. Feel free to go in there and check it out and dig further deeper into it. And I will also leave a link to a list of all the trading halt codes so you guys can see and get familiar with all the codes and the definition of all these halt codes. I hope you guys all enjoyed this video. If you did, hit that thumbs up button for me. It lets me know you guys like the content that I am creating for you guys. If you're new to the Trading Learning 101 YouTube channel, hit that subscribe button, join the Trading Learning 101 community where we all grow as traders. And until next time, everybody, have that patience, have that discipline, and study, study, study. Later, everybody.
The most valuable commodity I know of is information. Wouldn't you